That is the closing bell on Wall Street, and now it's market domination overtime, giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Senior markets reporter Josh Schaefer, as well as Yahoo Finance's Jared Blickery, joining us here to break down the moves today. Jared, let's start with you on that close.
Yes, a risk-on day here. Just look at the chart behind me on the Wi-Fi Interactive. We started the day up from Friday's close. We drifted up, and we are closing at or around the highs of the day. Very similar story in the NASDAQ as well as the S&P 500. NASDAQ, the leader, by the way, up about 2%, and we will check in on the small caps as well. Not up as much as the NASDAQ, but the S&P 600 small cap index up about 1.59%. We did see rates in the dollar kind of drift down today, but I want to get to the sector action. Everything but energy in the green today, and it was led by tech and communication services. So each of those very heavily influenced by the Mag 7 stocks. We'll get a picture of that with the NASDAQ 100 in a bit. Also want to point out that utilities, the other AI trade, that's doing well as well. And let's take a look at that NASDAQ 100 board. Amazon sticks out, down 1.44%, but most of the other names up in dark green. NVIDIA to a record high, up 3.62%. Alphabet up 3%. Meta, record high, they're up 3.5%. Microsoft, record high, up 2.20%. And a lot of standouts to the upside and really not that too much to the downside here. Similar story in the Dow Jones Industrial Average, aside from that Chevron energy trade that you see right here, and Amazon, which is down about 1.44%. Everything else in the green, so 28 Dow stocks in the green. If you take a look at the Dow transports, that's what's shipping the stuff that the industrials make. We see a little bit of downside action in Avis, down 2%, as well as Southwest, just barely red, and Landstar down a smidge there, but everything else in the green solidly. Uber up almost 2%, Delta up over 2.5%, and the list goes on. And here's my leaders board. I got a lot of tickers in here, mainly from ETFs. You might not recognize them all. What you need to focus on is everything is in the green. Haven't seen this for a while. Led by cannabis, that's MJ at the top. IPOs, ARK Invest, that's at this disruption trade. Also Korean stocks, we got K-Web in there, that's China. Just lots of green to go around. So I'll send it back to you on that note, Josh.
Thank you, Jared. Josh, your thoughts on the trading day?
Yeah, Jared was just pointing out, and we talked about this earlier today, but I think what really stands out is just seeing that tech rally continue, right? And have that be the leg that sort of leads the market higher when you think about companies that had solid results last week, rallied outside of Friday when we had that bad jobs report, and that kind of took the whole market, right? We felt like we had sort of some idiosyncratic stories driving the market last week in terms of earnings and stocks sort of moving on their own. Friday, the jobs report just kind of grabbed everything, right? Everything went down, and it was like, okay, what do I leave with this week? What is actually going on here? And as investors sort of digest all of this news, you go back to the AI tech trade. Of course, we're waiting for Palantir earnings to cross the board here, but you're going to have investors reacting to that and that AI story over the next 24 hours. But it feels like definitely a shift back from the macro to sort of the micro, some of the micro fundamentals that have been driving individual parts of the market definitely at work today.
Where's the Fed in all this? Odds for September cut?
Odds for September cut keep moving higher, Josh. So I didn't realize until I was just looking, we're at now over a 92% chance per the CME Fed watch tool that the Fed is going to cut in September. Then you flip all the way to December, you're now looking at a over 52% chance that the Fed cuts 3 times throughout this year. That would be likely September, October, and their final meeting, September, November, and December. And what you saw today with that, Jared was just highlighting, I think IWM, the small cap ETF, was up over 2%. So you did see a rally in interest rate sensitive stocks off of that. But what's been most curious to me is there's definitely more debate right now among economists in terms of either when the Fed will cut or how much they're going to cut. So I just mentioned 90% market pricing, right? That feels pretty confident. Team at Bank of America coming out today, Josh, and saying that they're not confident that the Fed is going to cut at all this year. They're sticking by their call for the Fed not to cut. Remember, we have inflation data coming next week. Another inflation report will be out in front of September, and you're waiting for tariffs to come into there. And if tariffs boost inflation, B of A's call is, I don't think the Fed can look through that one-time tariff boost for inflation. They might not be able to cut at all. So you're certainly seeing some back and forth on, and more split, sort of like the Fed itself, right? For how investors are kind of digesting that part of it.
If the Fed cuts because the data suggests the economy is weakening, What does that mean for risk assets?
I mean, I think it would probably be an immediately not great thing for the stock market, right? And that was something, you really think about it, you saw this last year, right? The Federal Reserve cut interest rates by 50 basis points when they started this cutting cycle last year to sort of set off a tone that the labor market was weakening at a pace that they were not that comfortable with. That wasn't received that well by stocks, but of course, over time, investors sort of said, okay, well, the Fed's here to help. That's a good thing. So that will certainly be a discussion we have ongoing into that September meeting.
Sure will. Thank you, Joshua. Appreciate it. Turning now to Palantir, as the company's second quarter results are just hitting the wire. Let's get right to it. Palantir reporting EPS 16 cents versus street expectations of 14 cents. Revenue up 48%, $1.004 billion. Street was looking for $939.25 million. So you have beats there on the top and the bottom. U.S. government, $426 million. That's a beat. U.S. commercial, $306 million. That is a beat. Turning to the outlook, Q3 outlook, they are looking for adjusted operating income, calling for between $493 and $497 million. That's better than expected. Revenue, they're calling for between $1.083 and $1.087 billion. That is also better than expected. For the year, raising guidance here for adjusted operating income, now looking for between $1.912 and $1.920 billion, better than expected. Revenue, they are now calling for between $4.142 and $4.150 billion, also better than expected. I did have the chance to speak with Palantir CEO Alex Karp about the quarter, about some larger trends and issues. Let me bring you those comments. On the results themselves, I asked Karp for his review of how the business is doing. Karp telling me this quarter is a once in a multi-generational quarter. There is no one in software even remotely close to those numbers at our scale. And then you could ask, well, how are they getting these numbers? Karp saying, we're getting these numbers in a way no one else has done, our way, which is the combination of forward deployed engineers, ontology, and large language models at the most important commercial and government clients across the globe, especially in the U.S. I also asked Karp about that broader AI race between U.S. and China, and I asked him who leads in that race. And Karp telling me, I think America is in the lead in government, and we're in the lead in commercial, but we could lose the lead. We have to have an all-of-country, all-in effort to keep America first, or we will lose. It's not a given that we win just because we're ahead. In fact, being so far ahead is often a danger zone. And finally, I just asked Karp really about the remarkable performance in this stock. Keep in mind, heading into this print, this stock was up about 100% this year. It was up around 560% over the past 12 months. I just asked Karp how he thinks about that. Does he think about that? Karp telling me, it's very hard to figure out how would you value a company with our financials. There hasn't been a company like this ever. You know what I'm thinking about, Karp said? How can we 10x our revenue in the next 5 years and make us even stronger and better? Well, for more on Palantir's second quarter, let's get right now to Wedbush Securities Managing Director Dan Ives. Dan, Palantir's results are out. What do you make of this report?
It's a blowout across the board. I mean, look, that's why they're the Messi of AI, right? I mean, it just speaks to this is transformational, the type of growth they're seeing. And you combine that with what we saw last week from the hyperscalers, that just shows this AI revolution. It's just starting in terms of the next stage of growth. Huge step forward for Palantir.
Karp telling me, Dan, Alex Karp, CEO, told me there is no one in software even remotely close to the numbers at our scale, he was saying. Listen, you cover a lot of tech names, you cover a lot of software names. You agree with that?
There's nowhere close. I mean, if you look what they're doing, I mean, look, I've covered tech 25 years. This is unprecedented territory. It speaks to our view. It's $1 trillion market cap in the next 2 to 3 years. I mean, they are, look, godfather of AI, Jensen, NVIDIA, Microsoft. You look at Alphabet. You look at, obviously everyone that we see in terms of big tech. Palantir's right there.
Let me ask you, Dan, heading into this print, this stock was up 560% over the past 12 months, okay? Just a rocket ship. And there are some analysts on the street, Dan, smart guys like yourself, who've been doing this a long time like yourself, who will say, listen, I like the company, I like the tech, the fundamentals look solid, but they don't recommend the stock to clients, Dan. You've seen this because it's the valuation. They'll call it, in their words, an irrational valuation. What is your response to that?
They hate it at 15, despise it at 50, screaming from the mountaintops at 100, and I think at 200 they'll be doing the same. Look, Josh, we've talked about if you focus just on valuation over the next year, you've missed every transformational tech stock the last 20 years. And Palantir, that I put in the same category.
Let me ask you, Dan, if it's not valuation then, and you're bulled up on Palantir, you've been right for a long time on this name, but the clients must ask you, Dan, okay, it's not valuation, what are the downside risks that I need to consider? Would it be competition, Dan? Is it product fit? What would the risk be?
Look, I mean, you could say valuation, macro, I mean, those are obviously, other issues that we could see come through. But the reality is that it's still early days in terms of where they're going. I mean, my view, they're basically creating a whole nother business in terms of the commercial business. Then you look on government, they're gaining more and more share on government. It's kind of a 1-2 punch. I think Karp's just playing a different game, right? I mean, I think he understands on par with Jensen and Nadella in terms of where this is all heading.
I see some analysts on the street, Dan, they do their checks with retail investors on this name, and they say they hear more interest about two issues with Palantir. They're hearing chatter, more interest in potential stock split and capital return. And I'm just curious what you make of those dynamics.
Capital return, I don't think is much of an issue because you're at the end of the day, you're focused more on this is growth mode. In terms of stock split, look, I think that could clearly happen, right? I mean, just given what we see, especially today and where this is going forward. And they are in a massive position of strength. And it goes back to like the last few years institutionally, this has been one of the most hated names I've covered in 25 years, but they just continue to execute. And I put in a rare category, almost a Mount Rushmore in terms of where I see them going.
In terms of the rare category, Dan, though, as you try to look across the competitive landscape, who would you consider competition? Who would you consider rivals or even potential rivals down the line?
Look, Snowflake's competition, you could argue Oracle, Microsoft competition, but to some extent they're partnering with them. Look, there will be competitors. This is not, I mean, they're not the only game in town, but they're just miles ahead from a technology perspective and what I hear from customers.
What do you hear from customers when you ask them? What do they tell you?
So unlike anything they've ever seen in terms of use cases and what Palantir can do relative to a lot of these other companies. And remember, they hardly basically have a direct sales force. I mean, that actually just makes this that much more pretty unbelievable in terms of these numbers.
How much credit, Dan, at the end of the day, do you give the C-suite here? Do you give to Karp?
It's gold standard. I mean, what Karp's done is it's a Hall of Fame performance. I think if you look what he's done, how he's built this company.
Do you see any evidence of these numbers? I mean, listen, I just see a lot of beats across the board. Do you see any evidence of these numbers, Dan, of any kind of macro or even downstream tariff-related impact?
I mean, look, these are numbers. Of course, you always, could they have beaten by more? Could they have raised? I mean, John, these are day plus quarter. I mean, in terms of what the street was expecting, beyond bull case. So there's nothing here that makes you any less, but you're more bullish relative to the numbers.
Dan, always great to see you. Always appreciate that instant analysis, my friend. Thank you. Coming up, more market domination overtime. When we return, we're talking to the CEO of helicopter rideshare business Blade on some big news Monday. We'll have that story and a whole lot more coming right up. Blade announcing on Monday the sale of its passenger division to Joby Aviation for up to $125 million. And joining us now is Blade CEO Rob Wiesenthal and Yahoo Finance's senior auto reporter. That would be Pras Sumare. Rob, it is great to see you on the show. So let's get into this big news, Rob. Joby Aviation acquiring Blade's passenger division. Walk us through this deal, Rob. How did it come about?
Sure. I've known Job and the founder of Joby for probably over 4 years now. And, when I started Blade, I guess in 2014, the whole mission of the company was to expedite the transition from conventional rotorcraft to electric vertical aircraft, because we were confident that the battle on the ground was going to move to the air. And we didn't name the company Blade Helicopter. It's always Blade Urban Air Mobility. And early on, it was clear that the leader in this space was Jobin with his aircraft, that he was going to get ambassador certification be faster in terms of commercialization. And this really was a perfect marriage from my perspective. And along the way, we built one of the largest air transporters of human organs in the United States, a company that now represents about 88% of the cash flow of Blade. And so what we're doing is we're separating the passenger business, which will go to Joby, and we're keeping our medical business, and it'll be renamed Strata Critical Medical. It'll be publicly traded. I will, as the largest individual shareholder, I'll be chairman of Strata, but I'll be working full-time as the CEO of Blade under Joby, which is now a $15 billion company with a lot of firepower to help grow this. And I really think what we're going to do here is accelerate that transition for Joby so they will be first to market with a great brand, great roots, great infrastructure, just a terrific business.
And Rob, talk about just a bit more about the Blade, the passenger service, Rob. How popular is that service now? You know, how many passengers, how many cities? Break it down for us.
We flew over 100,000 people in 2024. It is the largest helicopter company in the world in terms of moving passengers. We move more people by helicopter than some other company. We are, our biggest regions are in the Northeast to the airports, JFK, Newark. We have 3 lounges in Manhattan: Blade Lounge East, Blade Lounge West, Blade Lounge Wall Street. We have terminals at Newark Airport. In Europe, we have lounges in Terminal 1, Terminal 2, and Nice International Airport. And we're the largest company in terms of number of passengers in Europe, flying between Monaco and Nice. We have the exclusive franchise that fly people on a by-the-seat basis between Monaco and Nice. Fly Cannes, Saint-Tropez, Courchevel, and Geneva in season. So it really has turned into an international business with about $95 million worth of revenues. And it's a brand that resonates. It's kind of like, it's the Kleenex of helicopters at this point. And I think that opportunity to transition the people that fly Blade from conventional rotorcraft to quiet aircraft is big because they're quiet, you'll have more landing zones. That is the only thing that has been stopping Blade's growth. With quiet, there'll be much more of an appetite by people in cities, legislators to allow these landing zones. And any pair of landing zones is a brand new business.
Hey Rob, so in addition to the routes and the customer data you're going to provide to Joby there, what do you think also operationally you can provide for Joby as it sort of ramps up its customer service? And also, how far are we to seeing eVTOL technology like in our neighborhoods?
That's a really good question. So we obviously have customer data and relationships, and people have credit card data. These active flyers who fly multiple times to the airport or multiple times to leisure destinations. We have a consumer to cockpit technology stack, obviously a terrific brand, and infrastructure. This infrastructure is critical. So when you go to a Blade Lounge, like across the street from where we are in Hudson Yards and Blade Lounge West, we have the ability to process a lot of passengers and move helicopters every 5 minutes, both security, baggage check-in, weighing passengers' bags, seating them, making sure they're safe on the tarmac. That's the kind of know-how that you only get over a decade in this business, and it really isn't going to be that much different when you have eVTOL. It's going to be pretty much that same 5-minute flight to the airport, probably close to an Uber Black in price, but coming down quickly after that. And again, it's kind of an asset swap, and we'll have the trust of that helicopter flyer to go in this new form of transportation, a new form of kind of vertical transportation, that is. It's something that the competition to Joby does not have. They will have to start their commercialization strategy from scratch. And in terms of timing, Joby has said by next year it will be flying passengers in Dubai. So that will happen next year, and I can't give you an exact timeline. But what I'll tell you in terms of the U.S., this administration, you just take a look at the executive order they came out with on advanced air mobility. This administration does not like to be second, does not like to wait. So if you look at that executive order, we just to expedite the certification and adoption of electric vertical takeoff and landing vehicles is really going to be important. I think that's part of the reason why you've seen in the stocks, so much forward momentum in terms of all the eVTOL stocks.
And Rob, in terms of those Blade passengers, any line of sight you can give us about who are those passengers, Rob? What's the average demo, and has that evolved at all over time?
Yeah, but there's no question. I mean, I think, and that's what's also interesting for this deal. You can use the analogy of Tesla when they originally had the Roadster at $150,000, and now we have Teslas that are taxi cabs. So clearly, this was a high-end product to start, but that gave the brand its resonance and its sheen. But now, what started out as a product for the leisure market, people are now flying for as little as $95 with an airport pass. They're turning 2-hour drives into 5-minute flights between JFK, Manhattan, and Newark Airport, and about 200 euros or sometimes less between Monaco and Nice.
Rob, I think a lot of people think of Blade, they think of a higher end luxury consumer, taking that, jetting off to, or coptering off to the Hamptons or going to JFK Airport. I think that, or would you say that with eVTOL, it's a bit more of a democratization of that kind of travel, and it's going to sort of broaden that base of people looking at, private's considered the ultimate perk, but this is sort of like expanding it to everyone like you and I.
Yeah, 100%. I think that over time, this technology will enable lower cost flying. That is because it's electric, fewer moving parts, a lot of automation that can make it simpler for pilots. And just from a structural technological foundation, over time, we believe the cost will come down significantly. Right now, we're Uber Black. At some point, we're going to get to Uber X and then kind of beyond. And also, the more you fly, the less expensive it is because you have a lot of fixed costs. So the more landing zones we have, the more ability to fly you intra-city, more hours we can put in those aircraft, the less expensive it has to be for the consumer. So it is clearly going to be a product that goes from what was for the few when we started the company in 2014 to now something that's kind of around Uber Black price. And it will eventually become for the many. There's no question. That's why we're here. That's what we do every day.
Rob and Prost, thank you guys both for your time today. Appreciate it.
Thank you.
Time now for what to watch Tuesday, August 5th. We're going to start off on the earnings front. Some big names reporting on Tuesday, including Pfizer and AMD. Pfizer announced results for the second quarter in the morning. The pharmaceutical company's drug pipeline in focus for investors with some key patents expiring in the coming years. Pfizer trying to offset that loss with a $7.2 billion cost-cutting plan. The company says it has a pipeline of new drugs coming, but data on how effective those will be remains to be seen. And moving over to AMD, the semiconductor company reporting second quarter earnings after the markets close on Tuesday. Analysts expecting the company to post strong results for Q2, driven by its ramp up of AI chips, which could significantly boost revenue, especially if export restrictions to China ease. Taking a look at the economy, monthly ISM services data for July coming out on Tuesday. Economists forecasting that number to rise to 51.5, signaling that the services sector is growing and that there's steady demand from consumers and businesses. Well, that's going to do it for today's Market Domination Overtime, but to go anywhere, on the other side of the break, it's asking for a trend.